How's it going, everyone? So for today's review, I'm actually going to do a voiceover. I think it's good practice for me for future videos to come, but also to kind of engage and, spill out my thoughts. It's a little bit easier than just writing everything out. So the market is closed right now, but, futures are still going. Market's closed. It's 4 o'clock Pacific time. And this candle right here was the massive candle that we just received during market hours. Let's see the range. It's from 4178 to 4239. Wow. Okay, so even more than 20 points, right? It's gonna be hard to capture all that, but you don't need to capture all that in your day-to-day scalping, day-to-day day trading. So one thing that I really want everyone to look at. Give me a second, I'm messing up my charts really quick. Okay, so pretend like this green candle and this candle doesn't exist. So if you look at these past 3 candles, right, we have this gaping hole right here. It hasn't been filled yet. So this is what I like to call as volume imbalance, or ICT terms VI, volume imbalance. Pretty much where price kind of skips a price range, because it moves so quickly, and doesn't form candle bodies in its place. Usually that's a huge magnet in terms of where price wants to go, given price gives us that type of action. And that's exactly what we got today. So let's go. I'm going to be using replay to kind of give you a play-by-play of the trade I took today. I'm not there yet in terms of doing a live trade. I need full concentration still, because execution is still something that I'm working on. It's a whole mental game. We'll get into that later. But for now, let's just keep it to price replay. And when the time comes, we'll do live trades. So, okay. So this is usually how my screen looks like when I trade. If I'm on my desktop, this is what I'm looking at, right? I'm looking at the 1 minute, 5 minute, 2 minute, and then down here I would have a higher time frame. So I would start off with the 1 day, and I would just kind of mark out if there's any possible targets that we're aiming for. For today, it was the volume imbalance on the daily. That was what I was seeking, and that seemed like the same thing that price was seeking. And there was a bullish breaker that gave me the opportunity to enter and also profit from there. So that's what we're aiming for. But yeah, this is kind of what I'm looking at when I do trade. For the most case, I do like to use the 15-minute instead of the daily. The daily I don't keep on there. I just you just need to look at where price wants to go and just mark it, and that's it. You move on. So all right, let's go to this window. So today was really good on the 2 minute. So if you just had one time frame up, you wouldn't really get to understand how price is forming, where it's the cleanest. So this is why it's good to have multiple time frames. Yeah, so let's go to the 2 minute here. Let's focus on that. Pull up our handy dandy bar replay. So if you look at the bottom, let's take a look at the bottom right now. See it down here, 6:34. So this is Eastern time. I have my charts all on Eastern time, just to sync with the New York Stock Exchange time, even though sometimes I'll refer to Pacific time. But going forward, let's just use Eastern time. So when it comes to setups in the morning, I used to always trade as soon as market opens. I would get in a position, get in some bullshit position, actually lose some money, and then it would just like ruin the rest of the day. So all that kind of changed now, right? There's hit times, as we say in ICT terms, where it's anywhere from 10 a.m. A setup would form like 15 minutes before 10 a.m. 30 minutes after the setup would then execute, past lunch as well, and then the last 45 minutes of the market open. So these are the times I try to focus on. And in a lot of my back testing, a lot of my journaling as statistical inputs, it does kind of align. Like there is a lot of truth in these setups forming before these hit zones, as they call it, and then then trading and execute during those hit zones. So today was not too far from the truth. So today, if we play out what we're targeting, we play out the bullish breaker block. Again, I'm really speaking on hindsight bias here. I wanted to kind of take you through it as much as possible with leaving behind the hindsight bias, but there's going to be a little bit of hindsight bias here and there. So let's just use the 0.5 speed because we're on the 2-minute chart, so it's going to go by quick. So okay, day starting 9:30. 9:30 is the Eastern time for when the market opens. Ding ding ding. Straight off the bat, you know, like I said earlier, I got myself the volume imbalance up here. There are some targets down here I didn't mark, but again, I have hindsight bias right now, so I'm just going to focus on the daily volume imbalance that's up there. All right, so even right off the bat right now, there's, what do you guys see? I see myself a sell side liquidity pool that got taken. I see myself a swing high candle formation that the price is running through right now, and also a buy side right here. So all these things, right, we're going to target it. We're going to mark it on the on the chart. But before I do that, I kind of want to dig into how I trade and what I'm looking for. So I have been trading for 3 years, and you know, I've been through all sorts of resistance, all sorts of supports, pattern this, pattern that, and it got to the point where it's just all very confusing. Like everything was just mumbo jumbo. So if you follow me in my Discord, on the Discords that I'm on, I always stress that this is the one setup that I've been trading for the last several weeks. And the reason for it being is that it's just extremely easy. There's very little steps to follow, and when you follow it to the T, it delivers you amazing outcomes. It delivers you a stop loss, or let's say risk in this case, that allows you to continue into the next day or into the next setup. It allows you to also profit a very, very high risk and reward ratio. As we'll see, I have a lot of statistics backing this up as well. So before we dive any deeper, the main 3 things that I look for, right? Number 1, some sort of signal. So what do I mean by signal? So signal to me usually is like, let's say a liquidity pool gets taken. Let's say in this example, it's the sell side. To me, that's telling me, okay, now watch where price is going. Watch what price is trying to form. And there's only 2 things I'm really looking for once I get that signal. I'm looking for, are we looking for a bearish breaker block or a bullish breaker block? Right, that's it. That's the only 2 things then I'm looking for. Those are my 2 setups. That's the only thing I need to really see. And the number 2 is once I see that, you know, there is something going on with price that's telling me that a breaker block is starting to form, and then I try to search for a viable price target. So excuse my voice. I've been kind of sick for the last 3 days. So it's a little bit raspy. Search for a viable price target. So what do I even mean by a viable price target? I'll circle back to search what viable price target means. And in searching for a viable price target, you also accept your risk, right? Accept your risk. So if a breaker block forms, as I've gone over in all my other videos, it tells you how much you're going to be risking if this setup comes to fruition, right? If it doesn't come to fruition, it shows you here's where price will go if this breaker block is invalidated. And that's when you need to get the hell out, collect your losses, sit on your ass, and just wait for the next one, right? That's what I mean by accepting your risk. So, well, let me play the price out just a little bit more here. Kind of cheating, you know, because this is all bar replay, but I think the more you watch these videos, you're gonna have to, and the more you journal on your own, you'll start to understand what this all means. And you'll start to kind of pick this up on your own as well. You know, it's just kind of intuition that you build along the way, but you really do need to journal. So going back, my number one was signal, right? And then signal, I look for two things: breaker block, bullish or bearish. Number two is viable TP, take profit zone. Let's say TP, and stop loss, except stop losses. Number three is then a retest. All right, that's it. So these three things are what I'm looking for. Firstly, do I have a signal? Right? Is the price telling me that, hey, we're trying to form something here so the price can deliver to somewhere. I don't even know where that somewhere is. Number two is a viable viable profit zone, right? So is there a viable profit zone that, you know, if this setup does form, I can easily take some off the table there and maybe let it run. And in this case, I don't know if you guys are seeing it, there is one right now. And also the stop loss. So the whole idea of a breaker block. So let me start to kind of draw these out as I'm talking. So we have our sell side right now, right there. We have our buy side right here. And then this 3 candle formation, right? 1, 2, 3 is my breaker block. That is the swing high that I'm going to use as my breaker block. So you know what? Breaker blocks are just swing high or swing low, depending on whether it's a bullish or a bearish breaker block. And I'm not gonna get into that here. If you that's something you gotta go study on your own. But if you also look at my other videos, you can pick it up kind of easily. So what do I call it? A potential breaker block. I call it a potential breaker block because we're still testing it, right? We're still in the zone here. We just got the sell side. We just escaped the swing high. Price came back down. It's testing it now, right? But look here. Look at the range of this rectangle. We got ourselves 187, 182.50. So let's just assume, let's just call this 5. This is a 5-point range, right? This is what I am going to use as my risk, right? 5 points. Now let's assume you get in, let's say you catch it at 187 when price exits out of this breaker blocks, right? After it's validated, after it's tested and say, hey, this is a validated breaker block, we're gonna exit out of here and we're gonna go to somewhere that's, you know, a bullish price, a higher price up there. The first viable product to me, like straight off the bat, it's gonna be the top of that previous high, right? That's the most viable take profit area that you can get. So an example, this is 4198. So 498, 4187 off the bat already. That's, you know, roughly a 1 to 2 risk to reward. And that's, you know, if you let it play out, your viable target is already 1 to 2. But as I said earlier, we're targeting this daily volume imbalance. So this is kind of a stretch, right? The daily volume imbalance is at 4213. Our breaker block all the way is down here is at 4187. So that's about 26 points. That's a 26-point travel. That's a lot of money right here. 26 points, man. My math might be wrong, but 26 points. Right? So 26 points. Now let's assume that you let this whole thing play out. Let's say you go 26 points for 5-point risk. All right, let's just, to make it even, let's say 525, 1.5. You got yourself a 1.5 if you get in at 4187 and take your profit here at 4213. Now, like, people jump on this. People should jump on this type of risk to reward. And with these type of setups, you see these almost every day. Whether it's the viable target, whether it's the highest that the price reaches. But regardless, you see this type of setup every single day. The only thing, the hard thing is the execution, because once you're in, you really got to sit on your hands and let your stop loss do its thing. And the biggest thing here for me, and the thing that I'm working on, is really accepting that risk, right? Even though I say, hey, it's only a 5-point risk, which is if you have one contract that's $250, $250 loss. It's hard to accept because you see price go up. You know, price never goes up in one motion. It goes up and down, up and down. And anytime it goes down, you know, because we're human, we have that idea that this is gonna bust, and we should let it bust. If it busts, it busts. It's not a big deal. There's enough statistics, there's enough back testing for me to tell me that even if it busts in this type of setup, there's gonna be the same setup later on that comes and eats the risks that I took on. By eat, I mean I'll profit even more the next one, and then I won't even be thinking about the risk here on my previous trade. And that's really the mindset that you need to kind of develop to profit as much as you can on these type of setups. If you want to talk to me more about that, you know, just go ahead and send me a private message. But yeah, if you back test this day to day, every single day, there's something like this that shows up where even if it fails, the loss is so minimal that you just don't think about it the next time you see a setup like that come again and you trade. So let me erase all this. This is what a mess. So, you know, I talked a lot just now, but one thing that I'm kind of overlooking here is this volume imbalance right here. This volume imbalance, I know prices, I want to see price come back down, rebalance here. That would be the best entry for this breaker. So the reason being is not only have we cut our entry short by half, right? So we like 4184. So the point is now a 2-point risk if you enter there, which I did, right? This is in all my other videos too. I also wait for price to go to the volume imbalance for it to rebalance on the lower time frame once a breaker has shown. The only problem with entering like this is that you risk the potential of this breaker not validating, or let's say it does validate, but what price will do is comes down here, jukes you out a little bit, you know, fucks around over here, goes up, comes back down, takes you out on the stop loss, and then zooms up. So I mean, this can happen, right? And in that scenario, you really need to be kind of in the zone, in the mood, to take this trade back on again all the way to here. So you might incur like -2 points on this drawdown, but as soon as you see that, oh hey, it validates again, you got to get back into this position. So this is hard. This you need, you either step away after you take your loss, or if you have no emotions and you're like, you know, you're trading like a robot, this is what you would do. And this is what I've done in the past as well. So let's see how it plays out. It's enough talking. Let's just go. So I'm going to set for 4 positions. See, rebalance. I left to buy there. And now all I do is just a matter of waiting, man. Like, I already got into my position. I just wait for price to do its thing. I have my first, let me pause it real quick. I have my first take profit zone, which we just zoomed through. That I would take some partials here. This is how I trade, you know. I like to collect my profits, let's be honest. So I'll take some off here, right? And I still have 2 left. You know, I just secured 1.6K. It's a lot of money. And what I would do is, you know, you can either move your stop loss up into your profits here, or you can just move it to break even. So even if price comes back down, right? Even if price comes back down, we don't reach these areas. Look, I'm still up 1.6K. All right, and yeah, you could say, yeah, but you left another 1.6 on the table. That's always going to happen. I mean, that's just the way trading is, and you just have to accept that. So 1.6, I'm already in the profits. I have 2 more positions. When I'm in this trade right now, I would have my stop loss come back. I would have it moved up to my entry price, or a little bit above, so I can cover at least the fees. Excuse me. Let it play out. Now I want to see my daily target get hit. Again, hindsight bias speaking here, but there was a lot of up and down in this area. I'm actually finding a new strategy right now that helps me cope with this type of price action while I'm in the position itself. That's for another day. Oh, look, so we touched it, right? We touched it, but we're not completely in there yet. I want to see price go in to this area. Again, you know, it might not happen. I might get tricked out, and the price might fall back down, and you know, I've left 3,000 on the table. That can happen. That's okay. That's just how trading is. You just come back another day and you hit the same thing over again. There you go. Now I sell, flatten. Boom. Close to 5K. So I know I talked a lot in this video. But that's essentially it. There's more things that can be covered, but you know, for the first video that I voice over, I think this is good. Don't get greedy here. I mean, you know, you're out of the position unless you have a runner. Just don't try to get back in unless there's a breaker that forms again and you like the risk that it shows you. Don't try to get back in. It's just not worth it. Just wait for the next day, wait for the next setup. That's always the best way to play this market, because this market's always around. It's not going anywhere. You're coming in every day to trade, so why are you in a rush, right? I mean, that's what I need to tell myself. So yeah, there you go. Okay, hope you guys have a good day.